Hey guys, this is Mark from Mark Melbourne TV. In this video, I'm going to share with you my current thoughts on what's happening in the markets at the moment. In my last video, I spoke about how I think certain industries are being most affected by the pandemic and the virus that's spreading globally and affecting us all. And in this video, I want to share my thoughts on why we're going to see a loss in confidence of central banks and governments alike. So if you've been following the news, you'll probably have heard of terms like repo program or repurchasing agreement program, quantitative easing, asset purchase program, and printing of money. So what does this all actually mean? So these terms, I'm not an economist, but the terms that we're hearing are basically drastic measures we've never seen before, or well, at least all happening at the same time, in order to solve the liquidity crisis at the moment, right? So before we go into this, why has all of this happened within 5 weeks? So we've got to put a bit of perspective into what's actually happened. So why have markets tumbled by 30 or 40% within 5 weeks? So 5 weeks ago, the US stock markets, S&P 500, NASDAQ, Dow Jones, ASX, everything was at all-time highs, right? The ASX was above 7,000, and now it's currently sitting at 4,500, right? And markets are in free fall. So what's causing this? So yes, the pandemic has been the main reason for the free fall, or it's affected a lot of businesses. It's affected the operations of a lot of businesses. It's created a lot of panic, yes. But prior to this, markets were overvalued. A lot of businesses were counting on free money, basically saying, you can't time when a recession is going to happen. Everyone was buying stocks. Hedge fund owners were loosening their risk and buying stocks on leverage. So what happens when everyone's over leveraged, everyone's confident that we're going to have, a continued bull market? People start becoming more overexposed, and on the back of that, as soon as there's a panic, as soon as confidence starts coming out of the markets, it spirals like a virus, right? Pun intended. But we're seeing a lot of businesses, we're seeing a lot of hedge fund owners selling, right? And this is not retail selling that's causing the markets to crash by 20, 30, 40%. This is hedge fund owners, this is sophisticated investors, this is people with a lot more money than you and me. And they're being forced out of their positions, their margined positions, in order to avoid being liquidated by margin calls, right? So they're scrambling to get into cash and selling off positions in hopes to have, in hopes of not losing more money. So on a mass scale, when you see this much money leave the markets, you see people rushing to cash because they've been trading on derivatives and, futures, and not the actual assets themselves with actual cash. You see the pain amplified. So this is the main reason why share markets have crashed and amplified, and it's the fall has been exponential. So within the last week, we've seen share prices drop further than levels we've seen since 2008 or the global financial crisis. So honestly, in my opinion, the better question now to ask is not whether we're in a recession. It's very clear to me that we're in a recession. The question I would ask is whether we're heading towards a depression, right? An extended period of pain for the economy, pain for its people, and pain for businesses, right? So I think it's, if we look statistically, the global financial crisis lasted for about 18 months, or 1 year, 6 months. The Great Depression lasted about 3 or 4 years. What is your plan if you're going to, what strategies should we be thinking of as just regular people like you and I, in order to be best prepared for the possibility of a depression over the next 3 years? So because markets and recessions tend to last for extended periods of time, for that reason, I'm not rushing into buying stocks. We could take potentially years to recover from where all-time highs were. So even if we had a relief rally, it could potentially be years before you start to see your asset increase. If you're purchasing for the long term and you've got the mindset of buying shares and adding to them every year for the next 10, 20, 25 years, your compounded investment in reliable large companies with good cash flow and good businesses in general will be a good strategy. However, if you're looking to flip and make some money short term, I personally wouldn't be looking at the stock markets at the moment. So that's my message anyway. Hope you guys enjoyed this video. Hope you liked it. In my next video, I'm going to go a little bit deeper, start talking about particular assets, particular markets I'm looking at, particular things that are on my watch list. However, as I've said, I'm not looking